All right, thanks, Derek. It's morning Money Tuesday. We tackle your questions about investing. Money, money, money. Stewart Welch with the Welch Group joins us. And of course, you now have Rick Journey here, the highly intelligent Rick Journey, to ask you questions. You get the rather pedestrian questions of a sports guy. Hey, talking 401ks, that's what's on everybody's mind. Is it a bad idea, the way the market is fluctuating, to move your money from high-risk stocks, or money market funds, or rather into cash money market funds, and do that constantly back and forth to kind of offset those losses?
Well, Mike, I think some people think that's a good idea, but generally that's going to be a mistake. There is absolutely no way to predict what the market's going to do, and so you're really going to want a long-term strategy that's going to include some balance between stocks and bonds. And the closer you get to retirement, maybe the more you're going to want to have in bonds. But right now, the best opportunities on the stock side, even though it seems scary, over the next 5 years, that's going to deliver the best results.
And make sure you're investing the maximum that you can, right?
You should be at least investing the maximum that covers a match. So, the company's making a match. At least do that. And for most people, they ought to be doing, at least 10 to maybe 15%.
Absolutely. We got some reader questions here for you that you received. One person asking, when I received my 401k statement recently, I lost as much as I had invested in the first quarter. I'm getting closer to retirement. Got a child out of college and one in grad school. I'm confused. Why can't they move this money out of high-risk investments? Kind of what we were talking about.
Well, a lot of people are confused. They think that the company's overseeing the investments, and in fact, the they he's talking about is him. He is absolutely responsible for those investment decisions. So I have two recommendations. Number one is that he get professional help. If he's not comfortable doing this, bring in a certified financial planner, somebody to look and help him make the decisions. Second one would be to rethink retirement. He's getting close to retirement. People are living longer. Healthcare costs are rising. Think about staying in the workforce longer in the second half of your life. Think about having a job where maybe you take a little less pay, but you get a little more time off.
Right. Quickly, one last reader question says, I'm a widow, age 85, and own my home. Should I place my daughter on the deed with me so she will not have to go through probate to inherit it when I pass on? I have two daughters, and I intend to leave my estate to them equally, but I have been told you cannot put two people on your deed.
Well, Mike, two questions. First one is there's no limitation that I know of the number of people that can be on the deed, so she can have as many people as she wants. She needs to be really careful that she doesn't inadvertently make a gift of her property, because that could inadvertently create tax consequences if she sold it during lifetime or if when it was sold after her death. And so she needs tax counsel on this particular question.
All right, Stewart Welch of the Welch Group, thanks for putting up with me on Money Tuesday.
You did great, Mike.
Yeah,
thanks so much.
a lot. All right, you got an awkward room in your home. Maybe